Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's keep up with our gold analysis. So, although we were correct in our suggestion on the weekend, so the 3-drive pattern that we have suggested shows the good performance, but unfortunately guys, this has happened very fast. So it was not really a simple task to take the position on Monday, because market hasn't shown deep retracement as we discussed in the weekly report, but turns to the upward action immediately. Right in the morning on Monday. As a result, our target 1475 area has been hit just within the 2 sessions, and mostly it has happened yesterday. So today is just the rest of the distance market has passed here and hits the 1618 extension of the first drive. So you can see our 3-drive stands in place. And currently, guys, it's a bit tricky moment on the gold market, because at the first point of view, on first glance, we have the bearish pattern in place. So theoretically we need to choose the moment for taking the short position, because the target of this pattern, as you know, the bottom between the second and third drive, it's right here, it's 14 even. So it's significant distance, so even from the current level it's approximately $60 per contract. So it's very significant action. But from another point of view, what I don't like with this pattern is too fast action on the third drive. So where we suggest that market should reverse down, so we were watching for a reversal pattern. And when the market shows the acceleration right at the point where actually it should become weaker, this every time makes me worry about the perspective of particular pattern. And this is common for any bearish pattern. So you have the butterfly, and on the last moment in the butterfly you see the acceleration right at the target. It means that market probably will proceed to the 1618 extension of the butterfly. If you see acceleration to the 1618 extension, it could mean that butterfly probably will fail. The same story about the ABCD pattern. So market should give hints on the for the direction. So the weaker action right at the third drive, flatter leg, confirms that the market will reverse down. But faster action brings more risk with the pattern. Even despite that market stands right now daily overbought as well. So what we could do in the current circumstances? First, on the 4-hour time frame chart, take a look. We have our steep butterfly that we have discussed. Recall our discussion in the weekend. We said here either we will get a kind of the A, B, C, top, D pattern that will let us to take a position at lower level around 14 even and then be possessed in upward continuation, or it could happen that market will not show any deep retracement and will limit that just minor retracement turns up. In this case we will get the butterfly. Now we have it. So it's very steep, fast, but take a look, market definitely feels some resistance here. So you can see this spikes up, it's fast return back down, daily overbought, also makes impact on the price action, and as a result on the 15-minute chart you could recognize something that looks like the hand and shoulders. Of course it's a bit too choppy to treat it as the perfect head and shoulders, but you still could recognize some shape of this. So here is a kind of the butterfly also stand, minor butterfly. It's very typical for the head and shoulders when the part of the head and shoulders become the butterfly, right? It's downside action. This could become the head. Now market is forming the right arm. So theoretically, based on this pattern, it's around 1467. It could be opportunity trying to take the short position, or somewhere in this area, just because you already have the pattern in the place. So what we could do in the current situation? So I see only 2 possible scenarios. If you're worried about the facts that we have just discussed, and you're a bit not sure that maybe it would be better to wait a bit more and see what will happen, you could wait and see for the real reaction. So as soon as market will start dropping, maybe later there will be opportunities to go short and some countries cheaper to sell. So conservative traders should wait for more confirmation that indeed market starts works with this patient, because indeed some risks exist around this level, around this patient, just because of this acceleration. That's the first approach. Wait for more clarity. When you have some flaws in your patient, don't hurry to take the position. Wait for more clarity. Wait for a confirmation. If you trade on intraday charts and you are ready to trade this patient in particular, so right now because it stands already in place, you could try to do this, but maybe it could happen. But you should recognize and understand the risk that stands with this patient. The first, and second, you should be ready that maybe later you will need to re-enter again. If somehow it will be washed out here, maybe some different patient will be formed, and later market will still confirm the free drive patient, you will have to take position again. So that's two different approaches. So strong and weak side, you understand probably that if you take position here, you are taking position mostly right on top, and you have the position right in the beginning of this patient, and you get the all profit if we will correct, the market indeed will drop here. Conversely, you have you carry more significant risk. Those who will enter later will give more confidence. It will be less risk, but the result also will be maybe not as sweet as it stands right now. So that's the compromise that you should think about. Well, that's our current view on the gold market. So let's see what we will have here.